Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's update our view on the gold market. So you can see it's actually gold, just ignoring the recent positive factors for United States dollar that we've got just a few days ago with the ISM index, some other statistics that provide some support to United States dollar, and you could see that it absolutely has no reaction on the gold market. Instead of that, yesterday we've got the upward direction. So we just have discussed that our last target around 2278 has not been completed, which was making us thinking that actually market should show another spike up and complete this target. So yesterday talked about this. But currently, initially we thought that it might be some kind of the double repo sell to be formed in lower time frame, but currently this upper direction yesterday was too strong for treating as a double repo, so probably we will have to keep an eye on something else. But one important statement we could do right now, just because we should keep in mind that market has completed really huge fat target, which is stand on a monthly chart. This is monthly OP. In a normal situation, normal circumstances, any market has to show respect to this target with some pullback. If even on the monthly chart it will be very small pullback, even will not reach the 30% support area or something, but on lower time frames, on the daily and intraday charts, that should be more or less moderate pullback. This is most important thing. If market will not do this, it means that market stands out of the control of some technical and normal common factors that usually drive the market. So it means that some external power makes impact on the demand on the gold, that pushing prices higher. It might be a really big variety of different factors. Demand from the central banks, some lack of the amount of the physical gold in the storages of the COMEX exchange. It might be some geopolitical tension, some rumors maybe that start appearing or just leaked to the market. So, but it definitely will be not some common rules of the demand supply when the market just reacting on some statistics and so on. So, and currently we have to keep an eye on what will happen if we will get healthy, normal bearish pattern in the lower time frame, that's preparation for a pullback. In this case, everything goes well. So I'm not calling you to trade this pattern on the bearish side, because our long-term context is bullish. We are mostly watching for the rising of the gold, but this will be normal reaction, and we definitely will try to use it to buy the dip. So to use it for getting better entry chances on the long side. For scalp traders, of course, it will be not forbidden to deal with it, but you have to control your risk and minimize it, just because you understand that you are arguing with a major big tendency, which is really actually very fast. So you can see what's going on here on the daily chart. Final moment that I would like to say is that, in fact, we could say that this whole thrusting upward direction is still valid. So we could treat it as some kind of the whole thrust here, just because here we do not have 30% pullback on the whole upward direction here as well, and market significantly exceeded the previous top. So in this case, we could use it as a single thrust, and probably we could apply here some Jordan patterns if any of them will be formed. So putting here the 3x3, you could see what to watch for. Normally, if we will get the pullback, the first destination point will be somewhere around daily oversold and nearest standing support area, which is around 2160, 2180. That's approximately the area that we could get. Here's information that we could get from the daily chart. On the lower time frame, on the follow time frame chart, the same is true for this thrust. So this thrust is also could be used as a whole thrusting action, and here we also could keep an eye on some Jordan-Napoli patterns. Supposedly the first destination point where something could be formed is around 2240. This is 30% support, and actually as market drop right there, it might be bread and butter to be formed. With this upward action also you can see market has completed minor 4-hour time frame chart XOP target as well, which was at 2280. On a lower time frame on hourly chart, we just could suggest few patterns. First of all, the most obvious pattern that we could suggest is of course the head and shoulders, because this top stands precisely 1618 to the previous downside retracement. We have some divergence starting to form here on the 4-time frame chart, but also we have a larger one on the daily. It has not been formed yet, but we will see. Appearing of this divergence, it makes sense because market at the monthly OP, it's not just some free space when we see divergence many times and all of them were not reliable. But this divergence will appear on important monthly target, and it has absolutely different sense. So second pattern that theoretically also might be formed, since momentum upward is very strong, it might be some kind of the free drive. So, but this will be not classical free drive, but 1618 free drive. When the second drive stands at 1618 of the first, and the third drive will stand 1618 from the second. Theoretically, this is possible just because of the strong upside momentum. From the technical point of view, free drive seems less reasonable in the current situation rather than head and shoulders, because major target already has been hit. If we would suggest that major target is not reached yet, in this case, yes, the free drive might be more better solution currently, it's more logical. But in the current circumstances, let's see what reaction will be. Head and shoulders seems more reasonable in the current circumstances, but retracement just has started, so let's keep watching. If you would like to take the short position here, if you're ready for that, you could keep an eye on the possible catalyst to sell on the top. Very often it happens when the market shows the reversal. It very often, especially in the gold market, I'm talking about this every time, this market is forming catalyst T+2. So it's drop, here's minor ABCD retracement, and then downward continuation. So if you will see it and you would like to take the scalp short position, that's the particular pattern that you also could try to use.